Hello everyone and welcome back to the channel. Today we're going to talk about buying assets and why it's important to do so. But first we could do a quick recap. So at this point in the series, you have your finances under control and you're starting to actually save money and build up money. So the reason that you don't want to just continue to do that for long periods of time is because a thing called inflation. And what inflation is, it's when your government actually prints more money, and what that does is it dilutes your buying power. So it kind of becomes like a hidden tax. Normally inflation is about 3% a year. So you could run the numbers. If you saved money, say you had $100,000 sitting, right, over a 10-year period, when you go to use it, it would have 30% less buying power just from having it in an account. So what we want to do is try to outpace inflation, and you do that by buying assets. I know we have gone over the assets in a previous video: gold, real estate, and stocks. So gold on average over the last 10 years has gotten about 13 to 14% interest. So as you could tell, that will outpace inflation. Like I said, inflation is 3% a year. So that will give you a little bit more interest on your money, and it will also outpace inflation and preserve your buying power. So there are a few ways you can invest in gold. You can invest in gold by actually buying a stock that will mirror the price of gold and give you the same returns as gold. You can buy jewelry, which it kind of has two uses, because you can also wear it and it's an investment as well. And then you can buy what is called gold bullion or gold coins, 24 karat gold coins. They all pretty much do the same thing. It's just what you're comfortable with. Okay, so next up we have real estate. Now most people think when dealing with real estate, if you buy a single family home, it is an asset or an investment. But I have a difference in opinion in that, because you're obviously most times going to borrow money to buy the home, right? So once you're done paying back that loan, the amount that you paid back is substantially higher than the actual asking price, right? Sometimes 50% or higher over that 30-year period. Also within that time, you're gonna have to pay 1 to 2% maintenance to keep the house up for the year. Paint the roof, paint the walls, fix the pump. Anything can break in a house, right? And then also over that time, you're gonna be paying for insurance and land tax, right? So all of these expenses, normally when something costs you money and it's not making you money, it's more of a liability than an expense and then an investment. The other way to invest in real estate would obviously be to get a multifamily home, 2 or 3 apartments, 4 apartments, and go about it that way. That way you have that rental income actually generating you money every month, as well as the property appreciating over time. Then there's another way. You can also invest in what are called REITs, real estate investment trusts. And what they are is basically, they are companies that own big apartment complexes, maybe 1,000 apartments or more. And what they do is they'll share in the rental income with you every month for investing in them. So you find a REIT that has, say, a 12% dividend, and you invest, let's just say $100,000. Every month they'll pay you $1,000, right? Sharing in the rental income that comes in. So those are the 3 main ways that you can invest in real estate. So next up we have the stock market. Investing in the stock market, you can do it a few ways. I'm just going to go over the very basic way to do it. Most people, if they don't want to do a lot of work or a lot of thinking or research, they'll invest in what's called an index fund, and that the name of it is the S&P 500. You might have heard of it, or the NASDAQ 100, or the Dow 30. What these are is like take the S&P 500 for example. The S&P 500 is a group of the 500 most profitable companies in America, and you can invest in them, and the average return on that will be about 7 to 10% a year. So like we spoke about earlier, that'll outpace inflation, the 3% inflation, and give you a little bit of interest on top of that. So those are the three main ways to invest in assets. Before I go today, I'd just like to say, that investing in assets is literally playing the long game. It's not quick money. Like I see, you've heard the numbers that I've given today, 7 to 10%, 13 to 14%, and that's per year over a 10-year period. So it's really just kind of a set it and forget it. You have to be disciplined and continue to add money over time, and it will pay off. I'd like to give you guys a little bit of homework this week. If you could go on investor.gov or just go on Google and type in compound interest calculator and just play around with it, enter, whatever in the parameters that you feel comfortable saving per month or adding per month. Use the rate of interest of 7 to 10% or 13 to 14% a year, over maybe a 15-year, 20-year. You could play around with it and just see what you get. Yeah, so I'll see you guys back here next week. Thanks. Like and subscribe.